Hey there, Tim from Alpha Wolf Trading, wanting to thank you for stopping by to watch this interview and also make it clear to you that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies have been identified as opportunities for investment that could provide an above average return on our investment. This is our opportunity to get to know management, to understand the vision for the company, the strategy they plan to implement, and execute to achieve that vision for the company. So if you learn anything here today and you enjoyed the interview, please do us a favor and subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with another CEO interview. Very exciting company that is connected to the founder of another company that I happen to love. We'll talk. We've done a couple of interviews with AWT, Jeff Thraman. Love that company, and he happens to be involved in this one here. Just met with Brent. When did we meet? It was probably 3 weeks ago.
Yeah, I think about 3 weeks. Yeah.
Very interesting story. Very compelling. IPO'd probably, we just talked about rough timing, right? I mean, a little rough.
Yeah.
That's okay. You've been through challenges before. That's no big deal. This is just a moment in time, right?
The obstacle is the way. I think it's
That's exactly right.
Yeah. Yeah.
So Brent Ness from Aclarion, and the ticker symbol is ACON. And we'll get to the chart and all the technicals a little bit later. But Brent, what I'd like to do first is thank you for coming in and sharing the story. But give us a little bit of background on Brent and, you know, your successes and failures and how you wound up here and why you came here.
Sure thing. Well, thanks, Tim. And it is a pleasure. And I love telling the Aclarion story. I'm a little less comfortable telling the Brent Ness story because, it's never about one guy or one leader. It's always about the team. But I'm from Fargo, North Dakota. I grew up farming in a farm family and went to the University of North Dakota, in Grand Forks, and from there graduated, went into healthcare. So I've been a 30-year healthcare guy, and one of my first real territory kind of sales jobs I had in healthcare was in wound care, where my title was a wound care consultant, and I was working bedside to help patients that really are in the least common denominator of human existence is the bed-bound or burn victim kind of patients. And it motivated me. It filled me up from an altruistic sense that I could actually help these incredibly smart and talented physicians make a difference in people's lives. So from that point forward, I was hooked and wanted to dedicate the rest of my career to that of one that helps physicians help patients. From there, just a quick synopsis. I went to GE, where I really learned how to apply the business side of healthcare to tying it down to what the customer needs are, what the payer environments are. I mean, this is back in the Jack Welch era, where my colleagues walking around the halls in Waukesha, Wisconsin, were the likes of Mike Minogue and Mike Mahoney and Peter Arduini, and the list goes on and on of young people that were really having fun under Jack Welch's leadership. And that too was my introduction into diagnostic imaging, which when we get to Aclarion, it'll tie down perfectly, because the essence of Aclarion, the raw material of the Aclarion solution, is a product of an MRI scanner, which of course GE is one of the leaders in the world of manufacturing. But then I diverted out and went into spine, where I became the vice president of global sales and marketing for a division of Medtronic, called Medtronic Navigation at the time. And that too had an imaging component to it, but it gave me an opportunity to see the actual application in the OR of these enabling technologies and how they can help improve accuracy, reduce intraoperative radiation, and really improve outcomes long term. So that was a wonderful experience. I got to roll out a product globally with a big brand name like Medtronic. I had, exceptional people in that company, and really enjoyed my time there. And again, it got me into the spine space, and that's where Jeff Trayman comes in. I was enjoying a wonderful life as an executive of Medtronic in the phone rag, and interestingly enough, Jeff had created and founded a company called ProNerve in the nerve monitoring space, and he was looking for a leader that could help him really take nerve monitoring from where it was at that time to standard of care in the industry. So we executed a private equity-backed roll-up of multiple IOM companies across the country, and I think did a good job there. We exited, and then I learned something really important about myself, Tim. I took a little time off, and I realized that me laying around on the sofa in sweatpants is not an attractive thing. Believe me, there were others that were telling me this. So bottom line is, I realized that I'm a better person when I'm chasing something, when I'm working, and so I was thrilled to come back into the workplace as the original chief commercial officer of HeartFlow. John Stevens and the team out there, you may know obviously, if you're a healthcare investor, you know HeartFlow. And that was an eye-opening Silicon Valley unicorn kind of experience for me. Got to work with brilliant people. I mean, Charlie Taylor and Chris Zarins, the founders of that business, Campbell Rogers, the chief medical officer, still friends of mine. Those guys, they have it going on, and they understood the power of imaging, and then algorithm or SaaS-based added value in the cloud back down to the clinician, so that they could make better clinical decisions about where those patients should go. And so for those of you that are familiar with that business model, the Aclarion model follows that almost to a T. And there are other great companies in this kind of space, the AI enabled additive value and distinct clinical utility that comes out of interrogating and or applying algorithmic formulas to that raw data that's coming out of the diagnostic image, be it in that case a coronary CTA, and in our case MR spectroscopy. So great experience at HeartFlow, and really enjoyed my time there. Went to work back here in Colorado in spine again with a company called Mighty Oak Medical, another really unique 3D printing application, but again of a CT scan. So CT scan pre-surgical planning that effectuated the trajectories of the screws that need to go into the back when you're going to fuse a spine into a 3D printed guide. So I'm still on the board of that company and enjoyed doing that well. I've got a little relationship with a banking company that I continue to work with, and then of course I went to work for Clearly, again in the cardiology coronary CTA space. Jim Min, the founder there, just raised $223 million in the private equity. I was the president of Clearly from the Series A plus to the Series B round of funding, and then lo and behold, here I am at Aclarion. And when Jeff called me and described the business and described where they were, and said that he wanted a CEO to help them take the company public, on the NASDAQ. That is a very hard thing to say no to. I mean, working with Jeff again, working in spine, and I think if your listeners, tune out after I say this, when I describe this is a compelling clinical solution that will add value to physicians' decision making in the largest single spend in all of healthcare in America. The chronic low back situation or issue market size is absolutely huge. So with that, I wanted to apply what I've learned and bring it to Aclarion in the public market and really change people's lives that suffer from chronic low back pain. That's ultimately what we're here to do.
So, Jeff, him in AI, he goes from West Point grad, then he becomes a neurosurgeon.
Well, don't forget about his stint as an Ironman competitor.
Right, Ironman.
Yeah.
I mean, he's got it all going on.
Yeah,
and
right.
then he just, goes from being a neurosurgeon. He developed, he invented something that
130 patents to his name. Yeah.
The guy is just like
Prolific.
phenomenal, right? I mean, he's just the most, I just said to you, probably the most interesting man in the world. He's really close to that guy. I mean, he's close to being
Stay thirsty, my friend. Yeah.
But, with this AI stuff, I mean, he's got the Audio, which is artificial intelligence and algorithms and all that stuff. And, I think about, there's another company called Perimeter Medical Imaging, which is for breast cancer. It's AI, and that's, being able to target so that when a woman has to go in and get that taken out, right, because of that high imagery, and, they can get it the first time as opposed to having to go back in for a second time, right?
Right.
But that artificial intelligence is definitely starting to play a much bigger role in the medical space, right?
Yeah, for sure. Yeah. If you're paying attention at all, it's going to be incredibly because these are complex, be that images or biopsies or whatnot. I mean, Page AI is a great example. I think they're onto something really big in the cancer space that's going to help pathologists quickly and accurately identify which type of pathology they're looking at from a cancer perspective.
So that it blows my mind that the lower back issues repeat that to me again, is the largest addressable.
Yeah, more money is spent on the treatment of low back pain and back and neck pain than any other ailment there is. And I mean, let's do a little survey for all the listeners out there. And I'm just going to assume at the end here that you've got a global listener market. Who here has ever had low back pain or a low back pain episode? And then beyond that, how many of you have chronic low back pain where really, multiple days of the week you wake up and it slows you down. It makes it difficult to do what you want to do. It's debilitating for those that suffer from it. And if we were to have a global audience here, I'll tell you there are 266 million people that suffer from chronic low back pain around the world. Chronic low back pain.
And I would suggest, and this is sad because I just thought of this, but chronic, because the pain is so intense and it's chronic.
Yeah.
That's what has led to a lot of opioid deaths.
Well, it's funny you should mention that. The NIH has funded a study called Backpack, and it's part of the HEAL initiative, which is help end addiction long term. We have been chosen as the only imaging-based biomarker measurement to participate in a subset of that study called BEST. And this is a revenue generating opportunity for us. But more importantly, I think it adds to the mounting clinical evidence that understanding exactly what's going on from a biomarker, patient-specific biomarker perspective in the patient we're trying to treat will help that opioid addiction issue, because there are lots of people that get thrown into what's called conservative therapy, that if they're suffering from back pain because if it's a discogenic, biomarker driven back pain, all these conservative therapies are likely just wasting time and money and leading to more opioid addiction. Whereas if you identify it accurately up front on the first visit, you can actually go in and treat that, a disc replacement. And we've got patient testimonials and lots of physicians who completely have embraced this concept that the conservative care pathway is not right for everybody. It's time, if this is the situation, let's get that disc out and put a new one in, or fuse it for that matter. So,
all right, so let's I'm gonna move my I've got your logo up there and I've got the investor relations. We'll put that back towards the end, but I'm gonna pull that out right now so that we can take a look at your deck. We're not going to go through the deck page by page, but we are going to highlight some things here and talk about exactly what it is the company does. So
yeah, thank you. So what you're looking there on the left hand of that slide is an MRI image, and most of us understand that MRIs help doctors look at the anatomy. The problem is that when you're looking at that MRI image and you look at that disc space, which is kind of that whiter area in between each of the vertebra, it's a difficult thing to anatomically understand what's going on there and which of these discs is actually causing the pain. Now, what we do is we've taken a special sequence of MRI called MRS, or MR spectroscopy. And what that does is it quantifies the content inside of that disc, the biomarker content. And most specifically, there's things inside the disc like water and acid and protoglycan and carbohydrates. What it does is it quantifies the presence of those contents. And the scientists back at Aclarion, from way back in the beginning, have learned and correlated a ratio of the contents inside the disc that equate to pain. Now, so there's waveforms that are created by the MR spectroscopy, and they are simply quantification of the presence of things. And as it turns out, when you have high levels of let's just group them, called acid biomarkers, and low levels of structural integrity markers, carbohydrate and protoglycan. Low structural integrity, high acid equals acid leaking out to the nerves, which is pain. Now, the conundrum here for the practicing physician is that a disc in there, if you look at the second disc from the bottom, that right there, yep, that's got the red X on it. That doesn't necessarily look like an unhealthy disc. You might go to that bottom disc and say that's the one that needs to be treated.
right.
So if they treat that disc and leave the other one untreated, it leads to this false negative issue, which leads to the fact that on average, there's a 54% success rate in the mind of the patient that says that my pain has been significantly alleviated in fusion surgeries. 54%.
54. That's not a great percentage.
That's not great. And nobody in the value chain likes that. The patients certainly don't. The physicians don't like it. It's not good for the hospitals, and it's terrible for the payers. So everybody along the value chain realizes that we need to solve that problem. And that is the essence of what Aclarion is doing here. We're going to give the treating physician insight into what's inside that disc that may be causing pain. And this next slide is the perfect example of how we're going to build on clinical evidence. This is the Gornet trial, and it was one of the land-breaking trials that helped us really understand that we're onto something huge here. What Dr. Gornet did was he saw 139 patients, 73 of which went into surgery. Now, he was blinded to the NOCI scan results at the time when he made his normal clinical decision. As it turns out, when the NOCI scan results matched the treatment, the surgery that he did, there was a 97% success rate as measured by what's called VAS and ODI, which are patient-driven questions about, did this alleviate my pain? When the NOCI scan results did not match the treatment plan, it was right back down to 50, I think it was 54%, saw the improvement. So he fell right into national averages when he didn't follow the NOCI scan results. So this trial is going to be replicated, right? That's a big deal.
That's a big deal.
That is a big, big deal. And by the way, those results are durable at 2 years. We've just submitted for publication in a reputable journal, and that will be published hopefully next month. I can't make the announcement quite yet about where and when, because it hasn't been accepted yet, but it's been submitted. the 2-year results are durable. So basically, and it's intuitively obvious. If you operate on discs that are causing pain, even if they look like they're not, it's going to improve the outcome. And what it'll also do is it'll eliminate certain circumstances when you were going to operate on a disc because you thought it was painful. And as it turns out, it's not. Now, we're not the only determinant of whether a disc should be treated or not, or a level should be treated or not, of course. But we are a decision support tool for the physicians to catch those false negatives, those bright white discs that look perfectly healthy, but are in fact screaming pain because the acid is high, the structural integrity is low. And who would know by looking at an anatomical MRI? You wouldn't know until after the surgery and the patient comes back in and says,
still here.
I'm still in debilitating pain. And then everybody's scratching their head and getting their checkbooks out, writing more checks for more treatment or more days of missed work, more Thanksgivings in the hospital away from their families. It's
so this is,
yeah,
go ahead.
It's a huge deal. And here's the thing, we're not done. We know that this trial, although great results, we need to continue to build on the clinical evidence. So we're going to be funding a randomized control trial, a multi-center, multi-physician trial. This is the hard work that we're going to be doing between now and when we get to standard of care that fits right into our strategy. We're also, and we have commissioned, and this has gone out on a press release, the economic value analysis trial called EVAL. It's CDMI and the University of California, San Francisco has begun, and we expect preliminary results from that economic value analysis to be applied to this particular set of data. And again, talk about intuitively obvious that if you can keep those patients from coming back after they've been treated.
That's huge, right? I mean, that's huge.
It's why everyone on our team is just waking up, jumping out of bed every day, going to work, because we know we can make a huge difference in the economic, situation of healthcare, as well as patients' lives and surgeons' satisfaction of knowing that they're treating the right levels. So it's an exciting time.
Even as I think, and I just reflect back over life, I think about all the people that I've known that have had back issues, that have actually gone and gotten the surgeries and then come, wishing they never would have done that because it didn't solve the problem. I mean, I've heard a lot of horror stories, and if I had chronic back pain, I would probably really debate long and hard about going and getting anything done with my spine. I mean, there's just, it's just something that is nerve-wracking about that whole thing, right?
Yeah. Well, I've heard a surgeon say that people say that they don't want to get back surgery until they beg you to give them back surgery.
Exactly. I mean, I wouldn't. I would do everything I could to avoid going in for back surgery, right? Just because I have heard horror stories of, bad outcomes and stuff like that. It would just be something that I just really would try to avoid at every.
Well, any surgery should be put under a lot of scrutiny, of course, and every surgeon would tell you that. But I will say that when the physician has all of the right information, the best information, possible, they can really help improve the lives of people. And that's what we're all about. We're helping surgeons with this decision support.
And that's I guess that would be the thing that would be comforting to me, right? Is that now you have something that is specific to me, that's identifying, where the issue is, clearly identifying it, right?
Well, from the seat I'm in, which is clearly an industry seat, but been in healthcare for 30 years, I wouldn't want my cancer treated if a Page AI algorithm could be utilized to understand the pathology of those cells, right, of that biopsy. I wouldn't want to go to a cath lab without a heart flow, fractional flow reserve CT analysis, or I wouldn't want to be treated for plaque right, for potential cardiovascular disease without a clearly test, because I know what these things are. And now I can tell you that no one is ever going to go to a spinal fusion surgery that's a friend of mine or a relative of mine without understanding what's going on inside the disc.
Right.
So,
And that's what you would want for everybody. Right? Everybody.
And ultimately, when we get to where we're headed, the insurance carriers are going to say, we're not going to allow these types of procedures to take place. And I don't want to stop just at fusions, because there's all sorts of different procedures out there. We're not going to allow any of those procedures to take place until we understand what's going on with the disc. From a biomarker.
That's a critical piece for you guys right there.
For sure. And when we think about our strategy, Tim, when John Lorbecki, our CFO, and I were working at Medtronic, they commissioned a huge study called Patient Access Acceleration. And, we were both paying attention when they were rolling this thing out. And it talked about the journey of standard of care. And there's a really great pyramid that depicts all of the things that need to go into strategy around taking, the size of the market, which we obviously have, which is huge. I don't have that pyramid in there, but the size of the market, which is huge, but then developing the justification for moving all the way up to the point where insurance carriers make those kind of decisions, and where physicians that are, maybe not in the KOL realm at these academic institutions can trust that KOL advocacy has occurred, that societal endorsements have occurred. You get the big societies, and we're fortunate to have one society called the International Society for the Advancement of Spine Surgery, which has endorsed MR spectroscopy and NOCI-scan as an important additive information.
All right, let's go back to what's the KOL. What's the KOL again?
So a KOL is a key opinion leader, and in any clinical realm of function of healthcare, there are those physicians that work at major academic institutions and have the type of leadership, thought leadership kind of position, such that when these KOLs lean in, study, help you build clinical evidence, and advocate on your behalf, both to the community, the societies, and the payers, people pay attention, they listen. So we are there right now, and you've got a slide up here called competition, which I'll
this competition is this one here.
Because the KOLs that I talked to before I came on board with the company understand that they want that information about the disc, and that the current alternative today is to do what's called a discogram. Now, a discogram is an invasive, incredibly painful procedure that they actually inject dye into the disc, and you pierce the disc and inject dye in there and ask the patient while they're wide awake, hey, does that feel like when you're having a bad pain episode? Right? And they go disc after disc to try to determine which one is there. So all of the KOLs I spoke to before I came on board were like, we've got to get rid of discogram. Like, we need a better, non-invasive, less expensive, subjective, not objective measurement for what's going on inside that disc. So the KOLs that we're recruiting right now completely understand this alternative is expensive, painful, objective, and invasive, whereas our test is none of those things. So they're on board. We're having tremendous success recruiting KOLs to help us build evidence, go to the payers with this evidence, and ultimately move to a point where we can have broad physician adoption.
And I'm going to assume that, being that you've been a 30-year veteran in the industry, you probably know a lot of KOLs.
Yeah, well, between Ryan Bond, our chief strategy officer, who was with NuVasive, myself, and Jeff Trayman, of course, who is a neurosurgeon himself, we have it dialed in, and that community is really tight. I mean, they all know each other. They all go to the society meetings together, and when they decide to lean in, it can be a really powerful movement. And I'm going to learn from the things that we've done in the past, that I've done in the past, and not waste our time trying to sell into a cash pay market with no reimbursement, right? That's just a way to bleed investors' money out the door. And having been a salesperson trying to sell products that aren't reimbursed, I can tell you, that's a brick wall and a forehead meeting, day after day after day. So we're not going to do that. What we're going to do is we're going to focus our resources on those elements of that standard of care pyramid that matter, which is which is KOL advocacy, it's payer endorsement, and local coverage decisions, and then ultimately national coverage decisions. It's provider economics, meaning that the healthcare providers show up and they've got a business model that they work on every day, so they've got to be in the stream of reimbursement. And then ultimately we've got to have clinical evidence, the type that all physicians can feel comfortable that when they rely on this information, that it's been vetted. And that's what we're focused on here.
Okay. So your only competitor, or one of your major competitors, is an incredibly painful and invasive procedure.
Yeah, and expensive.
And expensive.
And
throw
expensive.
that on top as a bonus. Right?
Well, let's go one layer deeper, because it's also objective, right? And this gets a little bit sciencey here, so just hang with me. Our technology is subjective, meaning that within each patient, we measure multiple discs, and we measure the composition of what's going on inside of each of those discs, so that there's a relativity scale to the contents of each of those discs. Now, this involves nothing other than just measuring what's actually in there. So when we get that, we can say relative to the other discs, this disc and this disc are causing pain because the acids are higher and the structural integrity is lower. So
but you're determining that not by going into the spine.
An MRI. You're laying on your back listening to your favorite, your favorite rapper or whatever, whatever you listen to when you got your headphones on, right? Probably your podcast is what people are listening to.
All right. So, I mean, no invasion and significantly cheaper.
Yeah.
Right?
Yeah. And objective, not subjective.
And objective and not subjective. And they don't have to pop.
I'm sorry. I flipped that.
Or subjective, not objective.
Not objective. Yeah.
So you don't have to sit and poke, 5 different discs to find, right. I don't know. To me, that sounds like a much better option.
Yeah.
Right.
Seems like and this is, going back to the KOLs, and you're going to see lots of announcements from us about these key opinion leaders that are joining our efforts. And that'll be forthcoming over the course of the next several weeks here as we run up to the NASH show, North American Spine Society show. But they all get the difference between what we're providing and what is currently available. And really, the other thing to keep in mind is that because discography is falling out of favor, many of them just try to make the decision as best they can from the evaluation of the patient, the MRI, others, x-rays and other tests, but it doesn't tell them what's inside those discs.
So is your program something that would be added to an existing MRI machine?
Great question. Yeah. So it just needs to have single voxel spectroscopy capability, which is something that all of the new scanners, as I've spoken to all the major MRI manufacturers, they all have single voxel spectroscopy capability. We currently are in the market with several Siemens scanners. We're doing validation testing with Philips and GE right now. That's in the process, and it's one of the things that, going back to that standard of care pyramid, you got to have capacity. So adding Philips and GE and Canon and Hitachi over time is going to be an important part for us, because we don't want to go to a market and find a surgeon who absolutely wants us only to have MRI in his town that he can't use. So we're going to do our part to dance with the manufacturers and and work hard to make sure that their scanners provide the kind of raw material, again, that we can take and apply our algorithms to bring back home to the referring physician, so they get the rich information that we can provide.
Okay. So I mean, that to me is also attractive, right? So you're not having to come up with a whole brand new MRI machine. It's
nothing to buy. There is absolutely nothing for the radiology department to buy. It's a simple node. It's called DICOM, where the DICOM files get sent to us in the cloud, all HIPAA compliant, all right. I mean, we've got all of that locked down.
So who wouldn't want to do that, right? I mean,
whose ox?
Why wouldn't you want to do that?
Yeah.
Huh?
So the ox being gored, I guess, if we had to identify one, is if you're making your living doing discographies, poking the discs.
Yeah. Okay.
So there you go. I mean, there's always someone out there who likes it just the way it is.
Right. Well, people like inefficient systems, right? Inefficient systems can make a lot of money.
Yeah, and I think the payers, the payers are going to be concerned about the layering of costs, and to prove that the outcomes outweigh the layering of costs in the event that there are. Now, if we're just replacing discography, then it's a net gain right off the bat. But if they're not doing discography, if they've got a negative coverage decision on discography, then what we're talking about is adding the cost of the NOCI scan to that evaluation. We have to tie that down to better outcomes and a better patient experience, because every payer is also going to say that they want their membership to get the best possible care.
Right. All right. So you've got 21 US patents,
yeah.
Right?
Yeah.
17 issued international patents, and then you've got 13 that are pending.
Yeah. And some of that is, maybe I can, if you'd like, I can go into the three that I think were foundational.
Yeah, absolutely.
Okay. The three foundational patents were really signal to noise. The original signal to noise ratio inside that small area, that disc area. And as it turns out, we needed to, and I say we, this is the team way back a decade ago. They needed to understand the signal to noise ratio conundrum better, because as they grew the sample size, it wasn't changing anything. And as it turns out, they turned to telecom, right? To guys that are in the signal to noise business all over the place, who weren't so close to the problem as MR physicists, that they could step back and say, well, let's look from peak to trough and understand if there's a relationship going on peak to trough, and we're missing something. And as it turns out, we were missing the breathing, the respiration of the patient. So they solved that problem and put a patent on it right away. So that's a huge spectroscopy related patent. The next one is that patient-specific component that I talked to you about, that your discs and my discs may live in an entirely different planet when it comes to what we can tolerate as painful. So we've got this patient-specific patent. And then the third one is inside all these peaks I was telling you about, and there's a picture of all those crazy peaks.
Actually, I
put that
up here.
Visual. So inside all these crazy peaks, right? We needed to be able to understand, and you have to separate them so you can quantify them in the actual spectroscopy quote image. And what we learned, because that can be a very difficult process, is that alanine is present when two other acid biomarkers are high. So we were able to combine those three acid-based biomarkers into a single quantity. And that is patented, and it helped us understand it helped us be able to technically, capably measure that acid biomarker in a single measurement, instead of having to try to parse through three different peaks, right? So from a quantification and actual practical application, it made a huge difference. So those are the three big, foundational patents that were then correlated and tied out to positive discographies. So we did that work, and really, I've got so much respect for for the scientists that had come up with this. I joke around with my kids. I have a big Elton John fan, and I always say that I'm like Rocket Man. All this science I don't understand. It's just my job 5 days a week. But fortunately, within one quick phone call, I can get to the scientists that really were instrumental. Jeff Lotz in particular, and Jim Peacock, the original CEO and founder, were instrumental in inventing this and patenting it, making sure we have patents on it. And that portfolio is strong. And by the way, Tim, those patents are going to, from a long-term value perspective, are going to make a huge difference when we move into breast, brain, prostate.
So now, see, this is where it's getting interesting. This is where it's getting really interesting. I mean, it was interesting before, but now we're getting really. You're going to be able to take this further. Yeah, it's not just this.
Absolutely. No, listen, our runway is so exciting. It's long. It's gonna span multiple different areas of anatomy, and we're just going to leverage what we've learned here in the spine, which is, by the way, difficult because it's small. It's a small area of anatomy, and if we've mastered that, we'll be able to master the others, in short order. Now, we're gonna win here first, right?
You got to win. You're right. You got to get the
win here first. We're going to demonstrate, and the good news is it's not in a small market. It's in a giant market, screaming for an alternative to discography.
Okay. I mean, I don't know. This sounds pretty exciting to me.
Good.
Right?
It should. I'm doing my job today then.
Let's see. Platform technology opportunity. Let's see. Post-processing technologies apply. What else we have here?
Yeah, so that's what's speaking to that. It's the platform.
Where are you going?
Yeah.
Right?
Yep.
So you're not just sitting on your hands going, look, we're going to do this thing and we're good. You've got plans for future growth.
Exactly.
But you're gonna hit the home run here first.
Yep. Exactly. And then
we're gonna do the grand slam.
Yeah, we're gonna hire brilliant people that want to be part of a culture that just values their contributions and their intelligence and ability to help people. If you don't intrinsically have that, then you probably don't belong in healthcare to begin with. And those folks are easy to sniff out, frankly. Right.
All right. So you don't have any revenues right now.
No meaningful revenue. I mean, you can go to the website, you can pay for an OC scan. I can tell you where you can go get a scan done. But again, I'm going to be disciplined about the fact we're not chasing a cash pay business model. So listen, if you're listening to this and you're suffering from chronic back pain and you want to get an OC scan, go to the Aclarion website, reach out to us. We'll help you with that. We'll send you somewhere where you can get this done. But we have no meaningful revenue today. We're not, gunning for that today. What we're doing is we're investing in the infrastructure that will enable us to take it forward. And by the way, we're not giving any revenue guidance. If you read our second quarter 10Q, you'll understand we're not.
So if you're not giving revenue guidance and investors need something, what do they pay attention to? What milestones do they look for?
Yeah. Key catalysts for value growth, right? So look for KOL announcements, look for evidence being published. So we've got the eval, we've got the GoreNet 2-year follow-on data. We will be launching that randomized control trial. That's a big deal. And when you see institutions signing up to participate in that trial, that means that the market is leaning in to help us solve the problem.
So how when you say you're launching this, the last one that you just mentioned.
Yeah, it's called the Clarity trial. It'll be launched sometime in 2023.
What does that, what kind of cost is that to the company?
Yeah, it's gonna be expensive, and we're swerving into some of the business challenges today. Obviously, we came out with our IPO in April, and hey, it was less money raised than what we had hoped. So we're going to need another round of funding. We're hoping to move the stock price here between now and the first quarter of next year to issue shares and just go about this in the traditional way to get the money to fund that trial. We won't fund the trial until we have the money, obviously. But even absent launching that trial, we're also, remember, participating in the best portion of that NIH funded trial. So there's evidence that's being built today. And a good thing about that too is that there are multiple institutions. I mean, Wake Forest, UNC, the Ohio State, I mean, the list, UPMC, the list goes on at UCSF, that are being integrated. They've all been trained on how to provide that voxel spectroscopy up to us. They're participating in this NIH funded study, but that gives us an avenue to go in and sign a commercial agreement with them and work with their own leadership to then drive volumes and then hit the codes. And we haven't talked at all about reimbursement. We should at some point, the actual achievement of getting CPT codes, which is a big deal. But we need to push volume through those codes. And all of these opportunities for commercial agreements, which is another catalyst, you'll see us announcing additional commercial agreements out there, that will push volume up through the codes and use of the technology that can again be pointed to the payer. We can point the payer to the fact that the physician community is adopting this. And then the payers pay attention. They pay attention to evidence, and they pay attention to KOLs, and they pay attention to volume. So I would say if I were an investor in Aclarion, I would look for KOL announcements, I would look for commercial agreements, and I would look for evidence. You know, any additional evidence type of trial going on.
Right. You start building all three of those things.
Yep.
And then you get to coverage, right? Then coverage becomes
Exactly
a much easier path.
Then we get to have all sorts of fun. We get to hire a chief commercial officer and a sales force and have, you know, dinner symposiums and, you know, in cities around the country where we pull in 30 potential orderers, and, you know, that's a good time because we're not swimming against the stream. So
Right.
we'll be in the flow of the way that healthcare economics work. But until then, you know, we're gonna be working hard on these things. But listen, once the community starts to lean in, it's inevitable.
Right.
And when I think about, as an investor, inevitability into the largest single spend in healthcare,
That's a good problem.
That's a good problem. Yeah,
That's good.
Yep.
So I will say this. I will say that right now in this market climate, right? And I'm sure that there's going to be people that are watching this interview and then that just heard the fact that you're going to need to raise capital, that some of them cringed right away.
Yep.
And that's, you know, that's part of the game. It is what it is, right? Not a great environment to raise capital.
Yeah.
Right. And I don't see it getting any better anytime soon. That could be concerning. So, but let's talk about what you've got right now in terms of shares outstanding, fully diluted.
Sure. So we've got 7,821,000 shares outstanding.
Okay.
And
that's fully diluted.
Yeah. And we have no debt whatsoever. Our current ratio is 3.2. So we've got liquidity. And I will say, and the tip of the hat to our CFO, John Larbecki, we are managing cash and expenses, you know, in an incredibly responsible way. So we're going to take every dollar that we have, and we are going to hit these catalysts that signal to everybody that this is a management team that does what they say they're going to do and is worthy of a long-term investment look. And with that, the chips are going to fall where they may relative to how we raise money and how dilutive that round may need to be. The bottom line is we're a publicly traded company. We'll raise money as needed. And honestly, the long-term value of this enterprise is incredible.
Right.
I'll harken back to my previous employer, HeartFlow, you know, the unicorn out of Silicon Valley in the cardiology space. You know, they just backed out of that SPAC deal, but the valuation of that was $2.4 billion with a B.
Right.
$2.4 billion. It's the exact same business model that has traveled the exact same road into a smaller market.
Right.
So we're like I said, my friends at Heartflow, they've done the heavy lifting. The pioneers, I used to always joke when I was there, the pioneers take the arrows, right? So they had to figure out this pathway that I get the easy path of just strolling along what they've already done. I mean, yesterday I was on the phone with Heather Brown, which is a former employer there who ran the whole market access program after working in product development. Brilliant PhD, and I'm not ashamed to say we're going to learn the lessons from others.
Right, and that's fantastic, right? So, I mean, so this is the way I view it. This is how I look at companies, and this is why you and I are doing this interview.
Yeah.
Is there are a lot of great companies out there that nobody's ever heard of because you can't get coverage. You don't get coverage from Wall Street unless you do a financing deal with them, and
Right.
usually the financing deal isn't really the best. These institutions are not your friends. I mean, they're not your partners, they're not your friends. They do a financing deal that is, they're going to collect a fee for, they're going to buy shares below market, they're going to probably get some warrants attached to that, and as soon as they can, they're going to de-risk. If they get the same amount of warrants as they get in stock, they're going to sell the stock, and when they can, if they don't have a lockup, they're going to de-risk the investment. If you guys wind up hitting a home run, they go along for the ride, and if you don't, what did they lose? Nothing, right? So it's all, to me, it's horrible. Wall Street is broken. It's a broken system. And there are great companies out there that can't get discovered, that can make, life for how many people better?
Yeah.
How many people did you say?
266 million.
266 million people suffer from chronic back pain.
Right.
And this could be something that could change the lives of 266 million people. That's pretty powerful stuff, right?
That's right.
Who knows about it? Nobody. You're not on CNBC. And if you do go on CNBC, it'd be for a 10-second clip. What are you going to tell anybody about the company in 10 seconds? Yeah. Nothing, right? Yeah. So
I would say this. Listen, we're not naive about free market capitalism and how this all works. As a matter of fact, I'm one myself. So the people that know about us today are the KOLs, right? And so we're going to focus on that. Now, your point about us needing to raise money is a good one. It's a fair one, and we're obviously in evaluation mode relative to that, and we're not naive about what we need to do. So we're going to take the best option that's available to us at the time, and in the meantime, we're going to execute.
On the flip side of that, though, you've got 7 million shares.
Yep.
I met with a company. I met with a company that loved the product, loved it, thought it fantastic. No revenues. They've got 1.8 billion shares outstanding.
Yeah,
they're never going to make money. Not with that share count. I mean, it's never going to happen. There is a huge reverse split in their future, right? So if you're investing, you're like, oh, I'll wait until that reverse split comes, because
I don't think we're not living that game.
You're nowhere near that. You're not a bloated share count. You are uber tiny, right? One really positive news release, your stock could go ballistic because of the amount of shares that are available, right? I mean, if you've got over 7 million, that means the float, I don't know what's in the float. We have to look and see maybe I can see right here. No. Oh yes. No, I don't have it on there.
Yeah, I'll say this, Tim. I mean, you're the chart guy, but on no news, we've seen bumps in the stock price, and on the very smallest of news, the announcing of the eval trial, we saw a bump. So I agree with you. When we start rolling out these announcements, I think you're going to see movement of the shares, of the share price, and our intent is to do that, and then raise money off of the higher volume, so that we don't dilute anybody in the process.
And that makes sense. It makes perfect sense. Look, you went public. Why do companies go public? They go public because they want to raise capital because growth consumes capital.
That's right.
That's the way it works. And hopefully at some point, the company gets to self-sustaining and then profitability, right? But that doesn't happen overnight. So that's why companies go public to raise capital. So it shouldn't be a shock to anybody. So it should be, understanding the story, understanding the size of the addressable market, the opportunity, the moat that you guys will have around yourselves.
Yeah.
The fact that it's a non-invasive, non-painful procedure.
Right.
I mean, there's no equipment to buy.
Right.
It's basically like so just so I'm clear,
margin
software as a service model, right?
Exactly. Margins
recurring revenue model.
Exactly.
That
Software
doesn't suck.
No,
right?
Pretty good. Yeah. No, and there's another point I think that's important to consider. $33 million has been invested in this over a decade. So we have all these things behind us: FDA clearance, CE mark, the patent portfolio, the CPT codes, which is the reimbursement codes. We have those codes in place specifically for what we do, and all of these things are now behind us. Now it's just a point of getting the evidence, getting the KOLs, signing up commercial sites to drive volume, to get the reimbursement, and then we go. So we're right here. I feel like a racehorse with in the gate, getting ready to go. We're right here.
All right. So
yeah.
10 billion, 40 billion, 135 billion.
Yep. So these are the migration from fusion surgeries. There's 550,000 fusion procedures in the United States every year, roughly. And if you were to take and put that, everyone gets a NOCI scan, that's $800 million in revenue to the business right there. And I think this is the easiest addressable market for us to go after right away because of that success rate of fusions that we talked about. There's a problem that needs to be solved there, and we can help solve it. Now, the physicians I've spoken with have said, well, my pre-surgical planning or my treatment doesn't necessarily just stop at fusion. So I think this $40 billion market is also, which is other procedures, right, is also appropriate for the use of NOCI scan. And then when we start to move into all neck and back pain, when do I start? Is inversion therapy, is chiropractic or biologics?
And that's what I was going to ask you. There's all these pain. I mean, I see them, the small operations. We're not talking hospitals, and we're talking little operations for pain, specialized in back pain, right? Neck and back pain. Those guys are your customers, essentially.
Absolutely. And I think ultimately, as we migrate across this spectrum, the patients become the customers too, because there's a direct to consumer play out there somewhere where if you're suffering from low back pain, first, understand why.
Why? Right.
Why does my back hurt? Right. And do it from a biomarker, I mean, an actual physiologic biomarker perspective, really understand why. Before you go down some pathway, spending money, wasting time, and enduring chronic pain.
I put up your guys' investor relations email address, but maybe what I should do is have a big flashing, call this number. If you suffer from back pain, call this number or email them here. Right?
Yeah, we're gonna work through our healthcare providers and the imaging centers that are coming on board to really try to make that patient experience very fluid, a very positive patient experience. And as we recruit these new commercial sites, I call them commercial, but these sites that are capable of providing an OC scan, you're going to see more of that come into play. Today, it's a little clunky, I'll admit that, just because it's not our focus, but you can go to our website, Aclarion.com. You can reach out to us and we will find the closest center near you that you can, that
That's awesome.
you can pay for it and go from there.
That's awesome. All right, let me see if you feel as though I've missed anything, Brent?
Let's just talk a little bit about culture,
Okay.
if I can. I'd like to.
Yeah, absolutely.
If we're going to wrap it up. I'd like to end there.
Okay.
One of the blessings that I personally have had in being in healthcare all these years is you're working with brain surgeons and physicists, and so I've never had to waste any time wondering whether I was the smartest guy in the room. Right. I'm not the smartest guy in the room. And I think that's liberating, because what it does is it closes your mouth and it opens your ears. And it's amazing when that kind of culture emanates through an organization, and we put our customers first and in their appropriate place. Great things can happen, and it can be an incredibly fulfilling place to work, because you're listened to, you're cared about, you're listened to, you're trusted. And from a practical perspective, another thing that I'm just a complete believer in is we align incentives. The employees on my team all are shareholders of the business. We have aligned incentives, and my job as the CEO is to make sure every person that we bring into the team embraces this kind of patient first, customer first culture, and wants to be here for all the right reasons. We'll take care of the rest. You'll be trusted, you'll be respected, you will have a voice, and you'll be incented appropriately. And your incentives won't be any different than mine.
See, and so that is huge to me. So, I think one of the things that a lot of companies fail to do, and is making sure, I'm talking to everybody, down to the guy that cleans the bathrooms.
Absolutely. Absolutely.
Right? Deserves to own a piece of the company because he's part of the team. Yep. Right? Not just stock options for the C class, yep, but everybody. Right?
I agree. Yep.
And
absolutely agree.
Because it makes everybody aligned. And you guys are talking about, possibly making 266 million people's lives better. That's something to be proud of every day when you're going home, right? Yeah. That's a good motivator.
Absolutely.
Right?
Yep. On the tough days, you get out of bed because you're helping others.
Right.
And all the other traffic.
So it's I love the fact that you wanted to focus on this as the closing, because I can tell you this, anybody that follows me knows that, and it's taken me 30 years to figure this all out, but you can have a great story, great product, great service. If you don't have great leadership and a great team, I think the odds are stacked against you, right? And to have you towards the end here say, look, this is our culture, that is huge to me. Leadership, in my opinion, and I love the fact I like nothing more than a humble leader, right? Somebody that, look, if you are the smartest guy in the room and you think that in every room you're going
that's a problem.
Into, yeah, you've got a problem. And this is not a guy that I want to invest in, right? I want the guy that says, I'm not the smartest guy in the room, but I will surround myself with the smartest people I can find, right? That's what I want to be around. I don't want to be around a bunch of dummies and feel like the smartest guy in the room. What does that get me?
Right. Well, and Tim, leadership comes from everywhere too. So it's important that everyone understand that they've got the opportunity to step up and lead, and so it isn't. We shouldn't make this about me, because there's leaders all across our business, and we'll continue to recruit leaders into this business.
Well, I have to make it about you, because you're the guy that's going to be held accountable.
Fair enough.
Right? At the end of the day, you are the guy that's going to be held accountable, right? But I recognize the fact that you recognize this is a team effort. This is not a one-man show. I get that, but that's the quality of a good leader, right? That does recognize it's the whole team, right? So, and being that I respect Jeff as much as I respect Jeff, and after I met you, I sent him a note saying, I really like Aclarion, and I really like Brent. And, Jeff's a no nonsense guy. He came back and said, what I love about Brent, he gets shit done. And
well, we've got a lot of work to do. That's for sure.
But he
done
said
with pleasure.
You guys have worked together before. I was going to ask you, the one company that you started and then you took your little retirement and you were hanging out on the couch, right? Yeah. What happened with that company exactly?
So they ended up being consumed by another major player in the market. The roll up in that industry just continued to take place.
I don't want to say anything, but I'm thinking to myself, let's see. You guys are very early in this rodeo, right? I mean, you're just getting started. But as the KOLs come on board and as more studies come out to validate, who wouldn't think that you guys would be a target at some point?
Yeah, I guess my job as a CEO would be to take any offer that comes in and
look at it
and look at it.
Don't sell too early, Brent.
Yeah, no. Listen, I don't want that. I honestly don't want that. I think that when you look out at the roadmap, which includes other diagnoses, brain, prostate, breast, we've got a lot of really exciting things in front of us. And I think being independent and able to invest according to where our capabilities can be applied, I think that's the right road ahead for us. I'm hopeful that offer doesn't come and that we can run this thing out.
All right, Brent. Listen, I love the story, the reimbursement strategy. Just real quick.
Yeah. So we've got category 3 CPT codes. We're going to drive that to category 1 through volume of those codes being hit. And then of course, reimbursement comes behind moving category 3 codes to category 1, but it can come earlier as well through the private insurance carrier market. And by the way, the age of the average chronic low back pain patient isn't a Medicare aged individual. It's much younger. Our patient population is going to be in the 30s to mid 50s.
Really?
Yeah. Yep. And it's so the private insurance companies, United, Aetna, all those, Humana, they're the real market here for us.
Okay, I think we hit the KOLs pretty good. I think
there's our clinical strategy with leading with overwhelming clinical evidence. All the work that we're doing right now that we're investing in is depicted there. So we feel good about our progress there.
All right, now we're going to do my thing.
All right. let me put my seatbelt on.
So look, I mean, this is, you happen to catch the first bear market that we've seen in 14 years.
Right.
In a bear market, and it doesn't matter what the company, a lot of times it isn't company specific, it is market, right? So there is no appetite for risk right now because there is no appetite for risk. And why is that? Because there's a whole shitload of uncertainty out there, right? That is the problem right now. But so I don't look at your chart and think, geez, this is all company specific. Clearly, if you look at it, it goes from the upper left to the lower right.
Yep.
You are in a critical, I'm going to tell you right now, you're in a critical area. Why is it critical? Well, because this area, you can see this line has held as support for, this is where the support has been for quite a while, right? You got to bounce off of there. You went up here, and these must have been the spikes that you were talking about off of little news events, right?
Yep, exactly.
And then it winds up coming back down, and it's testing this area. And I'm going to tell you right now, the technical guys, they're brutal, right? If you close below that level, they're going to hit it. They're going to hit that stock hard.
Yeah.
But that's because they're just playing the technicals, right? How much volume or conviction is behind that? Who knows? Do they even know what your company does? Probably not. They're just strictly playing the technical chart. That, in my mind, would create tremendous opportunity. I think it's already undervalued here. I think this is probably a good area to take a starter position. I don't tell anybody to what to buy or what to sell. That's not my thing. My thing is to bring you the story, give you the facts, and I'll do it. I can look at the technicals and say, well, this is where we're at. If it cracks below or it closes below, let's just call it 80, what is it, 80 or 79 cents, somewhere in there. If it closes below 80 cents, where does it go? I have no idea, right? I mean, the bottom line is the support has been taken out. That's why it becomes a big technical thing, right? And that's why they'll hit it hard. I don't care where it trades throughout the day. It's where it closes. That's what always matters. And it closes below support. That they're just going to see that as a sign of weakness. They're going to hit the stock. Where it ends, I don't know, but eventually it will find support again. Right. And then it will test that support. And that's how you'll know it's support. And then it'll go off to the races, right? So right now, critical area, but I would suggest that this is a great area. It's also extremely oversold. As I look at another indicator here, you're way oversold, and it's ripe for a bounce. So I think this is a really great level. If you don't want to go all in, and I'm not telling anybody to go all in, at least take a starter position or put the stock on your radar, right? Start paying attention. Go to the email alert service, sign up for the email alerts, and stay in tune with what the company's got going on, because I think it's a fantastic story, and I think you're just getting started. Yeah, and this is a perfect opportunity. Actually, this is the kind of environment you want, right? Yeah. You want an environment where everything is getting massacred because, well, that's going to create value, and that creates, it's on sale. Look at it that way. We like to buy everything else in the world when it's on sale. For some reason, we don't like to buy company stock when it's on sale. I don't understand that.
And you use the word risk, and I think we're doing everything that we can to de-risk this situation by staying very focused on our execution and the plan. Hopefully the strategy that I've outlined here today helps people understand how obvious it is, and how we've learned our lessons, and how we will be disciplined about doing exactly what we need to do to get the healthcare market to adopt this technology.
Let me bring something up really quick, because it is on the NASDAQ, right?
Yep.
All right. So this will be the other thing that everybody's going to be freaking out about. They've got, you're below $1 for X amount of time. You're going to get that NASDAQ qualification notification letter saying you've got to get back in over $1, right? Yeah.
And we were there before, and then we sustained a long period of time, well over $1, as you can see,
right,
from the charts. So we dipped down again on the news that anybody watching the news sees what occurred on that dip. Has nothing to do with what's fundamentally going on in the business. As a matter of fact, quite the opposite in terms of what's going on in the business. And I suspect that, listen, what do you have? 30 business days below $1 before they send you a letter, and then you've got 6 months from there.
And then after that 6 months expires, you can submit for another 6 months.
I'm not worried. Listen, that's all in the noise. That's all in the noise. And if I could make a little fun, MR spectroscopy or MR joke here, look for the signal, not the noise.
There you go. Perfect. I love that. Right. Look for the signal, not the noise.
Yeah.
If it breaks down technically, I look at it like this. That is an opportunity to get aggressive. That is how I would view it. Right. Because you don't get a lot of opportunities. I mean, you've got, as I can see it, your only competition is extremely painful and very expensive.
Right.
I mean, this is, to me, you just don't find these kind of opportunities very often, right? This is a great story, and I want people to pay attention. If you know somebody that has back pain,
let's take care
about this company.
Yeah, let's take care of them.
Right, let's take care of them. I love it, Brent. What I want to do is want to have you back, man, when you feel as though you've got something significant. Want to talk about it. Okay?
Yeah, I've enjoyed the time, Tim, and I'm happy to come back whenever you invite me.
Yeah, I appreciate it. I appreciate you coming in. Hold on one second. I'm going to stop the recording. You feel good about everything, though. I feel great.
I've never been more optimistic.
Okay, man, hold on 1 second. Hey there, all you stock market junkies. Thanks for tuning in to yet another CEO interview here at Alpha Wolf Trading. Today we had Brent Ness, CEO of Aclarion, ticker symbol ACON. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. Why not give us a share? While you're at it, how about giving us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.